What's happening, guys? Welcome back to another Sunday Scan. For those of you who might be joining us for the first time, we are Investors Underground, and every single week we do a Sunday Scan to help to recap the information from the past week, talk about everything that was happening, and then really get you prepared for the week ahead by talking about the most in-play tickers, the best setups, and things that are on our radar into the week ahead. And making trade plans around that. So if you haven't already, like, share, and subscribe. And this is a great way to really get prepared for the week ahead. We have a couple of announcements before we get into Scan for this week. And this is the week that pre-sale tickets for Traders for a Cause go on sale. So for anyone not familiar, Traders for a Cause, the annual version, it's usually held in Vegas. This year, we have a new location for that, and that is in Miami. It's happening at the end of February. And this is really like the big, annual conference where all the traders in the industry meet up. They, rally around great causes. They give to charity, and it's a great place to also network and everything. So kind of the who's who of the trading community usually is there. And, everyone's able to catch up and really just connect in a way that is very special to everyone in the industry. So pre-sale tickets for Project Impact members will go on sale Tuesday at noon. So they'll get a head start. They'll get the early bird tickets, and then on Friday at noon, that is when the public sale of the tickets will commence. So we will provide a link to that, and make sure that you are really checking that, because at Tuesday, the early bird tickets are out, and then Friday at noon, the public sale tickets begin. So these tickets go fast, and this is just an incredible way to kind of get set up and prepare for that annual conference in Miami at the end of February this year. I will be there. Nate will be there. A lot of people in the trading community are going to be there. And for anyone who's already been to one, there's really nothing like it. It is unmatched in its presence for traders, for the community in general. And if anyone's kind of been in a rut or in a lull, or looking to connect with people, there's no better place to do that than at Traders for a Cause. So be sure that you're watching that link for those Project Impact early bird ticket sales, and then on Friday, the general ticket sales for Traders for a Cause. It's going to be an exceptional event as always. We'll have a bunch of people, especially because the new location, we have a lot of international people coming too, people from Puerto Rico, people from Europe. And so now it's a much easier location than trying to, go to Vegas for some of the people that are across the world. So this is a nice central location, going to be a beautiful venue, beautiful weather, and I hope to see everyone there. So be on the watch for those tickets. I will give the disclaimer now that I'm not a financial advisor, and these are not buy or sell recommendations. Everything I'm going to talk about is for educational and informational purposes only. So let's get right into Scan for the week ahead. I will pull up my chart, and we will kind of walk through some of the things that we were seeing. So in SPY or SPX, pretty good correction over the last week. Nothing abnormal. And, just from a statistics standpoint, usually every single year in the stock market, there's about a 10% correction. And then also statistically, usually every, 4 or 5 years, there's about a 20% correction. So it's not always, the case, but a lot of times on average, that is kind of what plays out over the long term. And so it's very, very common to have these, pullbacks within a normal trading cycle, a normal trading year. So every time we have a scare or a pullback, that does not mean that we're going into a bear market. It does not mean that we're going into a deep correction or a prolonged one. But a lot of times you get these kind of panic flushes, and it's like defrothification is what I jokingly call it. And you basically have, throughout the course of a year, so many different people, are in all these speculative names, and it kind of gets built up. And then you have a period where, okay, it's time to de-risk a little bit. Maybe there's some negative news, and you just have all the froth come out of a lot of these names that have been super hot. So take a name like Oklo, for instance. This has been on a tear, especially with all the AI stuff. And you can really just see how a lot of the air comes out during pockets like this. And it's the same thing with even names like Palantir, where even though they reported good earnings, they still have very high valuations. And so they have these big, flushes. It's very healthy for the market to have these, mini corrections, and to kind of, spook some people out, reset some of the positioning, and kind of, defroth in a way that I like to describe it. So basically, a couple of factors contributed to this, most recent correction, or this mini correction. It's not even a 10% correction or anything like that, at least so far. But basically, a couple of things with the government shutdown. That's been going back and forth. Can they get it back open? Is it going to stay on? That can affect some liquidity things in the financial system. That can also affect some, data things that spill over into the Fed. So the government shutdown is one thing that has been a little bit disruptive. Another big thing is OpenAI, which has basically been like the epicenter of the AI trade. It sparked everything around NVIDIA and all that stuff. So OpenAI had some comments from their CFO that they were asking for like almost government backing or some kind of government involvement to help prop them up as they make all these big commitments. And that really scared the market because OpenAI does less than 20 billion in revenue, and they've committed over $1 trillion to like all these things, and basically everyone else in the ecosystem is also committing hundreds of billions or trillions of dollars to all these things. And a lot of these companies, they really don't have that kind of money, and part of it is for, I think, tariff reasons. They need to kind of make these kind of commitments even if they're not necessarily realistic, to kind of avoid some tariffs. And then, so that was another thing. And so basically, when OpenAI started acting like they might need some support to make some of this stuff happen, I think a lot of the air came out of the chip and the AI sector, just because as those realities start to sink in, that a lot of these companies probably aren't going to be able to deliver on these promises that they're doing. So big kind of, pull in liquidity there, a lot of de-risking. So that was one thing. Another thing is that you had the Supreme Court looking at the tariff cases, and the authority and the basically the realities of, are people able to use tariffs on an international scale in the way that they've been done this year? And the Supreme Court is kind of leaning towards maybe not. And so what that can do is that can cause a lot of uncertainty. Do the tariffs go back to the people? Do people start to cancel their commitments? And you have this whole, ecosystem that's been built around these tariffs. And so when you have a change in narrative with that, you don't know exactly how it's going to play out. And so people a lot of times just start to de-risk as those uncertainties creep into the market. So those were a couple of big things. And then also we had, recent like earnings season and everything like that. You had things with Meta and some other companies issuing bonds to help, fund some of the CapEx for the AI. So there's been a lot of things going on. And I think a culmination of those factors really contributed to this most recent, correction. But again, you have several periods like this per year usually. And then some of them end up being like a big correction. But this so far is just a very healthy, very minimal correction. But you have definitely some defrothing happening there. So I just want to give a little bit of context around that most recent, market volatility that we saw. And there's been some great opportunities. I actually like trading environments like this very much because I'm much more intraday. I have a couple of swings like with BE and things like that, but overall, I like intraday action. I like being able to interpret news and a lot of reversals, and it fits my style very well. But for a lot of people who are maybe more like full-time swing traders, or people who like, very large trending names that happen for weeks or months at a time, I could see how this is a little bit more of a disruptive period to some of those strategies. So different times for different people and different strategies, but it all fits in. And, a couple of comments that I was talking to some different traders about this week is, if people are not necessarily doing their best in an environment like this, a lot of times they just don't have a strategy for this type of action. So if you were to look at, the kind of strategies that a lot of traders have, it usually comes down to about two things. It's either, some kind of trending strategy like swing trading, or it's some kind of a reversal strategy, like looking for, blow off tops and shorting that, or using puts, or, panic sells and then buying, the bottom of that panic and looking for a reversal there. And so most strategies are kind of based around those two kind of ideas, either trend following or, looking for reversals. And a lot of times that can happen on different time frames. So for instance, a trend follower could be looking for, if the market's trending up, relative strength on the day for intraday trades, or they could be looking for a longer time frame like a swing trade. That is like trend following. They're looking for continuation patterns. They're looking for a general trend of higher highs and higher lows over time. And then it's the same thing for people who are more bearish, have bearish strategies and looking for downside. If they want a trending strategy, they're either looking for relative weakness, or they're looking for things like, during a bear market or during a market correction, what are the names that are trending down, and looking for continuation patterns around that, and basically looking for lower highs and lower lows. And then on the reversal side, people are either looking for blow off tops that reverse, or, panic bottoms that kind of reverse. And a lot of times when someone's struggling in a market, it's because they don't necessarily have, one of the strategies for one of those like four types of main things. And so someone might have a good strategy for continuation or swings on the long side, and maybe they have some like good reversal setups for like small caps. So maybe a big blow off, panic and small caps, and then reversal there. And then maybe they have some good like bounce strategies, but maybe they don't have a really good trend following strategy for volatile periods on the downside. And so just looking at about like how can you round out your strategy, how can you round out your tool belt to really have something that fits most market environments, and that's very helpful as opposed to having maybe three strategies but the fourth one is lacking a little bit. And so if you have a period for a couple of months where you have, something where that fourth strategy would really come into play, you're not just totally lost in that environment. And if you, need to work on strategies like that, that is good. And that is what makes a well-rounded trader over time. It's experiencing different market environments and having strategies that can, really help you in those specific situations. So that was just a little bit of a note, that I thought would be helpful to some people as they kind of, round out their trading strategies to be able to be adaptive in almost all environments, which is, really kind of the ideal situation. But it takes a lot of time and a lot of cycles and, a lot of effort to learn those strategies along the way. So I think Tesla was a really great example of some of this recent action that we've been seeing. They had their, shareholder meeting and basically a big vote around Elon's compensation package. So if Elon takes, Tesla to a multi-trillion-dollar valuation, he gets like $1 trillion of that. So it ends up being like 12% or something like that. So, big incentive for a big, milestones, things like that. But basically, I think everyone's been in, Tesla, like looking at this nice space that's curling up. And I think around here, a lot of people were anticipating that breakout on positive news of the compensation package, kind of being approved. But some of the things that we've been seeing in this market is that a lot of times stocks are selling off on perceived, positive news. It's being used as like exit liquidity. And so if you have a big, ramp up or big positive news, a lot of times people will sell into that, just given that the environment's been a little bit more, I don't want to say bearish, but a little bit more, a tighter liquidity, a little bit more downside risk. And so a lot of times people are selling off good news into those periods. And so we had some good theses this week around that action, kind of, assuming that we'd have a little bit of a pop on that news and then a sell-off, and that ended up playing out pretty nicely. So that was a nice little example of some of the action there. You've also had some names that are holding up pretty well. Again, like Google and Apple. So Google here, Apple here, they held up pretty well during the market correction. So it's always nice to track, what are the Mag 7 or what are the big names that are doing well, even while the market is volatile? And then what are the names that are pretty weak? And so we talked about Meta, possibly testing that low 600 area as they're kind of borrowing money for that CapEx, even though they, really missed on some earnings due to some tax one-off tax things, but still they got pretty punished from that. So again, the overall chart is still fairly intact, but it's a big, defrothing of some of the recent positioning there. And I think that is very healthy for the market in general. And it can be good feedback for management teams of what is the market rewarding and what is it punishing. NVIDIA, this was another name that kind of got defrothed a little bit this week. And so again, around those OpenAI statements and around like the overall AI trade, NVIDIA is like the main recipient of a lot of the CapEx that the other Mag 7 names are, spending. And so it had a big ramp up on that. But again, kind of like with Tesla, after that good news comes out and after we get into a little bit more of a volatile environment, a lot of times that gets, sold off. And especially if you have some of the scares with, OpenAI and maybe some CapEx stuff pulling back, maybe the AI trade, is unwinding in a little bit of pockets, then that can hit NVIDIA. And NVIDIA is such a large part of the overall index now. It's around 8%. So when NVIDIA has a big, drop from 210 down to, 180 or something, that's a pretty significant move. And that can drag down things like SPY and especially like QQQ as well. So that's something to kind of be aware of. Another name that I was trading a decent amount this week was HIMS. So I was looking at, kind of on the topic of those like bearish continuation patterns. This was kind of a nice example of like if the market were to stay weak from here, and if we were to get pretty bearish and market maybe goes down 10% to like a real correction, a name like this that is kind of been in a range and it's been like a recent momentum mover over the last year. This is a name that I could very much see kind of breaking down under that 40 base and really maybe testing like the 30 level or something like that, as a lot of that recent money over the last 6 months comes out of it. But if you just have, this big range and you have the market start to get saved a little bit, then maybe it just hangs out and kind of, leans on that support or relies on that support to kind of hold it up for now until you have some other catalysts. So we had catalysts with, Trump and the weight loss things with LLY and NVO, basically lowering some of the prices, putting them on some government subsidies. And then some of the, quote unquote knockoff brands or the generics could possibly get hit on that. And that is kind of spilling into HIMS business. And so even though Hims reported pretty good earnings, the weight loss sector is a big, kind of aspect for them. And so if that is like a key pillar of their business might be shifting, then that news combined with the bottom end of a channel and a bearish market could potentially cause that to break. So I had some good put trades on here, but it really didn't open up, or it didn't snap the way that I was hoping it to, but it did have some dips under that 40 level. But for now, it's kind of holding. Palantir, another name that really sold off. They had, positive earnings, but very high valuations. And after earnings, big flush. And again, 210s to 170 or so. That's a pretty good, pullback. And you saw that with a lot of like these recent momentum names and these market leaders. And so basically on Friday, you had a pretty nasty sell-off, but then a big save towards the end of the day. And you saw that with NVIDIA, you saw that with several names, and that usually can mark the bottom of if it's just a short-term, mini correction. That is very much, the action that you would see in a situation like that. But if you were to see like a big rejection, or like maybe it tries to ramp up on Monday and then really sells off and then starts to get under these lows, that is like a big bearish continuation kind of set up there, as opposed to just, nice correction and then it gets saved. And now you're kind of right back to business as usual. Maybe it's still some more volatility, but we're not talking about a market meltdown when, stocks are doing saves like that. That is very kind of healthy action. And like these wicks on the bottom, you can see there, that's really a sign that something is testing a demand zone and gets soaked right back up. So you can see that with NVIDIA. You can see that with, where's Palantir here? So again, big flush there, and all these wicks over here, kind of the same thing, testing that demand zone, and you usually have it's showing its strong support right around there. On the continuation side, you do have some names like DDOG, which is like more of the software sector. And this is kind of like what you call like a peg setup, where you have positive earnings or positive catalyst, and you have, like it's hanging out towards the highs of that. So especially while the market is weak, that is a very strong signal for bullish action. And this is coming up towards, some all-time highs around here. So this could potentially be on watch into the week ahead for some, different continuations, breakouts, and things like that, especially if the market starts perking back up. So DDOG will be on watch for that. Open had a nice, kind of crack under this base here, and then big save. So they issued some stuff, special dividend warrants and stuff. And you see this a lot with like these retail names. You saw it with AMC and things like that. Basically, the end game for almost all of these companies that have like a big retail following is they are basically giving people stock, and in return, the management, the teams, the influencers, they get the money. And so over time, you'll see these, most of the time normally just trend down and kind of go back to where they came from. But you have these pockets along the way where they get people excited and everything like that. But it's, the long-term vision is kind of just to dilute or basically put shares into the market, get money in return, and then the management pays themselves and influencers and everything like that. And a lot of times retail is at the butt end of that, kind of strategy. And this is very common with a lot of these things. And whether the influencers know what they're, really doing, that end game or not, whether they admit it or not, that's really the thing. Sometimes they actually believe it and they're kind of, misguided there. But a lot of times you saw that with like AMC and, the CEO there just shamelessly, shilling and, just issuing stock, dumping it on shareholders. And now the stock's down 99% or 95%. So it's just, it's a big strategy that a lot of these corporations use. And they have influencers to kind of, be the Pied Piper and lead people into that big trap, unfortunately. So far it got saved, but now it's kind of testing that base. So we'll see if it starts to kind of peak out and fade back down. Could be a big trend change, but otherwise it might just chop and go back into a range there. OKLO, we talked about this. Kind of the nuclear theme unwinded a lot. So you saw with OKLO and SMR, big, chart breaks here. Like that's a nasty looking chart. And you can see that this has been in play for a long time. But I think one of the things that's scaring, people with the SMRs and the OKLOs is that you have a lot of, insurance risk that comes with some of these nuclear names. And then also if you have, they're not going to have earnings until years from now. And then also if the AI trade and the infrastructure trade might not look like it's going to happen the same way it was before, I think that really just hit the nuclear sector pretty hard. But on the flip side of that, you have names like BE, which of course, I've been a big fan of kind of from a swing perspective. And this is still kind of a good niche, in my opinion, where it's finding, it's still kind of delivering some of those AI power needs, but it's not nuclear, it's more fuel cells. So it's much more like plug and play with that. And so again, you can see even while the market has been very volatile, this has held up pretty well. You've had some flushes, but these big wicks, again, testing those demand zones and then soaking right back up. So if this holds and the market gets a little bit, more bullish, I could see this, very much breaking the highs and kind of continuing there. And again, you can't fall in love with any company, any stock or anything like that. You're just looking at, what makes sense. You're looking at the chart to see if it confirms your thesis. And if this were to break down or if this were to, unwind, I'd be out. I'd be, dumping this thing. I don't care about any of these stocks. You have a nice thesis, you have something that's, working. For now, you try to get a good read on it, but at the end of the day, you're in the market to trade, to basically try to make money from it. And if it's not doing that, then the ticker name will change. You'll find something else. But the worst thing you can do is really fall in love with the stock. The stock doesn't know that you own it. The stock doesn't care about you. It's just a vehicle. It's a business, and a tradable, kind of abstraction of that business is the stock that represents ownership in that. So, we're here to trade. We're not here to fall in love with any of these companies. But that being said, this has held up pretty well. Higher highs along the way and good wicks along that. So if the market holds up, I would assume this would be pretty, bullish into the weeks ahead. Rivian, so had some good trades on the downside with this, but again, check out these wicks. It had some good rejections off those highs, but you had a save and you had a save. So if you were to zoom out and look at kind of a bigger picture, Rivian had some recent bullish news, and it's pushing up against the top of that channel here. So if that were to build above it, and you can see, having wicks that close to above there, that's usually a pretty good sign. So if that were to start to build above that 16 or 17 level, I'd have a pretty bullish bias on Rivian for some continuation higher there. A couple other sectors and themes that have held up decently well. They had some unwinds, but again, testing, and you see those wicks, those saves, Cipher and IREN. You don't exactly know if this is, a save that gets, if it's followed by a stuffed move where it's basically the opposite of this candle, where you have a big wick on the top and then it starts to trend down. That could be a trend change. But if you just have these saves here, then that is still a higher low, and that is still just kind of a trend in play there. A couple other names like this SNDK. This has been a really, really nice trender for a big part of this AI cycle, especially since the end of the summer. So the last couple of months, and this has been very, very, steady action. And I talk about like normalized behavior, and you saw this with SMCI and some other names like back in the day when they were really running very cleanly, is that a lot of times you have, a niche part of the market, like with memory or certain types of chips that are like in a supply crunch. And so you basically have a lot of volume come in, and it's just like institutions accumulating this as it goes up, and you can see all those corrections get soaked. But this is still very normalized behavior, and it hasn't really sped up that much. Yes, it's up a lot, but it hasn't really, the slope of the speed hasn't changed a whole lot until around now. So I think over the coming weeks, we could start to see this really speed up. Maybe it goes to 300 or something. We don't really know. But usually after those names speed up, that's when they really, really get good for those mean reversion trades. So, you have a bullish continuation kind of for now. And then as they speed up, they get overextended, and then they kind of trip over themselves and they go back to a much, lower level. But for now, this is still, I would say, holding trend fairly well. And you'd really want to see this speed up significantly. So this slope, from here would start to speed up and go absolutely parabolic. And then you see the volume with that. And then after a couple of days of 10% moves up or so, that's when they really get good for that mean reversion type of trade. NBIS, this got saved, and this has earnings this upcoming week. And so if the earnings are good, maybe you could have a big rally back. Again, this is still holding somewhat of a higher low on the daily chart. And so this is a name that got hit pretty hard. But if they have bad earnings, companies have been punished pretty badly. So they better deliver. They had some good, recent deals with Microsoft. So as long as those are holding true, that should probably be a more bullish catalyst for it. But again, if there's something off that I'm missing or the market's missing, then this can get punished. But for now, I think that after a big correction like that, and it has earnings coming up, that's usually a good time for this to rally back. And then the other one, this was on watch, but didn't really do anything over the last week, is this BT, again, liquidity trap on watch. And now on Friday, it just started to kind of peak above, you like that prior day. And so it's still on watch for the next week. But if it doesn't do anything in the upcoming week, I'll take it off radar. But this is still a liquidity trap potential. Sometimes it takes a bit longer for these names if they maybe exercise warrants or something and kind of loosened up the float a little bit there. So those are really the main names that I want to talk about on Scan this week. Hopefully that was useful to you. Make sure that you are leaving a comment of what you want to see more of. Make sure that you're liking this video, and then share it with a trader buddy. Help them get prepared for the week ahead. We spend a lot of time looking at the market, and we're trying to distill that down into maybe 25 minutes or a half hour to make the preparation a lot easier on all of you watching. So that's all I have on my end. Again, early bird access for Traders for a Cause, the big, usually Vegas conference. It's being held in Miami this year. And so the pre-sale tickets for the Project Impact members, they will go on sale on Tuesday at noon. And then Friday at noon, that is when the public sale of the tickets starts. So I will see you at Traders for a Cause. I hope that everyone has a great week ahead, and I'll see you in Investors Underground.